Listen up, investors. The landscape of investing is undergoing a seismic shift. The world of finance is changing fast. Traditional methods are being challenged by innovative solutions. One of the biggest game changers? Exchange-traded funds, or ETFs. These financial instruments have revolutionized the way we think about investing. These babies have exploded in popularity, and for good reason. They offer a unique blend of flexibility, affordability, and diversification. They offer a flexible and affordable way to invest in a variety of assets. Whether you're looking at stocks, bonds, or commodities, ETFs have got you covered. ETFs have been around for a while, but their growth has been phenomenal. In the past decade, their assets under management have skyrocketed. More and more investors are realizing the benefits of ETFs. They provide an easy entry point for beginners and a strategic tool for seasoned investors. This isn't just a fad, folks. The rise of ETFs is a testament to their effectiveness and efficiency. It's a revolution in the making. The financial world is embracing this change with open arms. So what's all the fuss about? Why are ETFs becoming the go-to investment vehicle for so many? Why are ETFs taking the investment world by storm? The answer lies in their versatility and cost-effectiveness. Let's dive in and find out. We'll explore the key features that make ETFs so attractive, the different types available, and how you can incorporate them into your investment strategy. Stay tuned as we unravel the secrets behind the ETF phenomenon and guide you through this exciting new era in investing. ETFs are like baskets of assets. Imagine a basket filled with a variety of fruits, each representing a different type of investment. Just like you wouldn't want to eat only apples, you wouldn't want to invest in just one type of asset. They hold a collection of stocks, bonds, or other investments. This collection can be tailored to different investment strategies, whether you're looking for growth, income, or a mix of both. This makes them perfect for diversifying your portfolio. Diversification is key to managing risk and ensuring that your investments are not overly dependent on the performance of a single asset. Don't put all your eggs in one basket, right? By spreading your investments across various assets, you reduce the risk of losing everything if one investment performs poorly. The beauty of ETFs is their simplicity. They are designed to be user-friendly, making it easy for both novice and experienced investors to participate in the market. They trade on stock exchanges, just like individual stocks. This means you can buy and sell them with the same ease and flexibility as you would with any other stock. This means you can buy and sell them easily throughout the trading day. Unlike mutual funds, which only price once at the end of the day, ETFs allow for real-time trading. No need to wait for a mutual fund to price once a day. But wait, there's more. ETFs offer the advantage of transparency, as their holdings are usually disclosed daily. ETFs also tend to have lower fees than traditional mutual funds. Lower fees mean that more of your money is working for you, rather than being eaten up by management costs. This means more money in your pocket. Who doesn't love that? With ETFs, you get the benefits of diversification, simplicity, flexibility, and cost efficiency, making them an excellent choice for any investor. Wrong. Sure, ETFs trade on stock exchanges like individual stocks, but that's where the similarities end. ETFs offer instant diversification. They hold a basket of assets, not just one company's stock. Think of it this way: buying a single stock is like betting on one horse in a race. An ETF is like betting on the whole field. You're spreading your risk across multiple companies or assets. Don't be fooled by the superficial resemblance. ETFs and stocks are two different beasts. Not so fast. Some people claim that actively managed stocks or mutual funds can outperform ETFs. They think they can beat the market. The truth? It's very difficult to consistently outperform the market over the long term. ETFs, especially index tracking ETFs, are designed to match the performance of a specific market index. This means you're getting broad market exposure without the high fees of active management. Remember, investing is a marathon, not a sprint. Slow and steady wins the race. Mythbusters. Are ETFs really that illiquid? Absolutely not. One of the biggest misconceptions about ETFs is that they're illiquid. This couldn't be further from the truth. ETFs trade on major stock exchanges, just like individual stocks. This means you can buy and sell them easily throughout the trading day. You'll always be able to find a buyer or seller. Liquidity is key in the fast-paced world of investing. With ETFs, you're never stuck in your investment. You have the flexibility to make adjustments as needed. Mythbusters. Did ETFs cause the market to crash? Don't believe the hype. Some folks like to point fingers at ETFs when the market takes a tumble. They claim that ETFs exacerbate market volatility. But this simply isn't true. Market crashes are complex events with multiple causes. ETFs are just one piece of the puzzle. Blaming ETFs for a market crash is like blaming the messenger for bad news. Remember, ETFs are just tools. How they're used depends on the investors. Don't fall for the hype. ETFs and market efficiency, a powerful partnership. ETFs play a crucial role in promoting market efficiency. They provide transparency and price discovery. Investors can see exactly what they're buying and how it's performing. This transparency helps to keep markets fair and efficient. It prevents large price discrepancies and arbitrage opportunities. ETFs level the playing field for all investors. With ETFs, you can be confident that you're getting a fair price for your investment. Liquidity and stability. The role of market makers and ETF providers. Behind the scenes, market makers and ETF providers work tirelessly to ensure the liquidity and stability of ETFs. These professionals are the unsung heroes of the financial markets, working diligently to maintain the balance and efficiency of trading activities. Market makers are like the referees of the ETF market. They play a crucial role in maintaining order and fairness. By providing liquidity, they facilitate smooth transactions, ensuring that buyers and sellers can trade ETF shares without significant price disruptions. They provide liquidity by buying and selling ETF shares throughout the trading day. This continuous activity helps to narrow the bid-ask spread, making it easier for investors to enter and exit positions at fair prices. Without market makers, the ETF market could become volatile and less efficient. ETF providers, on the other hand, create and manage the ETFs themselves. They are responsible for designing the ETF structure, selecting the underlying assets, and ensuring that the ETF's performance closely tracks its intended index or strategy. They ensure that the ETF's holdings accurately reflect the underlying index or strategy. This involves regular rebalancing and adjustments to the ETF's portfolio to maintain alignment with its investment objectives. ETF providers also handle the administrative and regulatory aspects of managing the fund. These key players work together to keep the ETF market running smoothly. Their combined efforts provide investors with a reliable and efficient way to gain exposure to a wide range of asset classes and investment strategies. By ensuring liquidity and stability, market makers and ETF providers contribute to the overall health and functionality of the financial markets. Choosing the right ETF provider, a critical decision. Not all ETFs are created equal. It's essential to choose a reputable ETF provider with a proven track record. Look for providers with low fees, a strong history of performance, and a commitment to transparency. Do your homework. Compare different providers and their ETFs. Read reviews and independent analyses. Choosing the right ETF provider can make a big difference in your investment returns. The power of ETFs, diversification and beyond. ETFs offer a powerful combination of diversification, low costs, and flexibility. They allow you to build a diversified portfolio across different asset classes, sectors, and geographies. But ETFs are more than just diversification tools. They can also be used for specific investment strategies such as income generation or growth investing. The possibilities are endless. ETFs empower you to tailor your investments to your unique goals. ETFs, a smart choice for today's investors. In today's rapidly evolving investment landscape, ETFs stand out as a smart and strategic choice for investors of all levels. They offer a winning combination of benefits that are hard to beat. So what are you waiting for? Start exploring the world of ETFs today and discover how they can help you achieve your financial goals. Remember, knowledge is power. The more you know about ETFs, the better equipped you'll be to make informed investment decisions. Don't forget to check out our recommended videos for more insights and tips on smart investing.